Hello everyone. Today we'll look at the Indian stock market versus the other markets like the emerging markets and the developed markets. Basically, looking at the important share markets across the world and try to see where is India's position at present. So, in today's newspaper, there was one article wherein it said that even though Indian stock market has been down by 10% from its high, still we can see it is quite highly priced compared to the other markets. So I thought let's go deep into this data and try to look at different data sets and hope this will be useful for you when you try to do investment into different other stock markets, and hope this will be useful for other investments also. Okay, so first is, if you see in the emerging markets, we can see India's return is at 8.8% and the PE is of 21.7. And if you compare it with Brazil, so Brazil has given minus 10% return, whereas the PE is very less of 7.5. China is has given 12.67% return and the PE is also very less of 12. Hong Kong is at 17.67% return and PE is at 9.8. Indonesia has given negative returns of 2.6 and the PE is of 13. South Africa is also with like around 10%, where the PE is of around 12, and Taiwan has given 28%, where the PE is of 22.63. Now, if we just look at these numbers, we can say, oh, India has not performed that well. But now let's compare India's returns against, if we see 5 years try a time frame and for each of the index. So first I have taken Brazil index and tried to see how it has fared in the 5 years time frame. So here we can clearly see India has given a very good performance compared to the Brazil stock exchange, wherein it has just risen by 2% and India's stock market has gone up by 95%. So the difference is of 92% over here. Now, if we look at the China index, here also, if we see, China has given just 7.5% return, whereas India has given 95. So this is also a very big gap of around 88-89%. And this is a striking picture of Indonesia, wherein we can say, sorry, of Hang Seng index. So this is down by 30%, and at the same time Indian stock market is up by 95%. So this difference is of 125%. So this is the huge difference over here. And then if we look at the South African stock market, it has risen just by 5%, whereas India has given 95% and the difference is of 90%. So this is the story for the emerging markets. Now, how it is faring in the comparison with the developed markets, if we say. So for example, US S&P 500 has given return of 23.8% and the P is of this, now here the P is high of 27.8%. France has given negative returns of minus 2%. P is less of 15.5. Germany has given 18.8% return and the P is of 16.7. Japan has given around 20% return and the P is of 18.8. And UK has given 5.7% return and P is of 15.5. So if we compare the developed markets also, other than US, India has a better, like it has higher P ratio after US, and the returns, now let's see how the returns are. So when we compared it with the S&P 500, S&P 500 has given 88%, 81%, and Nifty 50 95%. So around 12-13% difference over here. If we look at the France market, it has risen just by 22%. So here the difference is of around 70%. If we compare it with the German index, so it has risen by 50%, and here the difference is of 45%. For Japan, it is around 68%. So here the difference is of 23 to 25%. And if we look at the UK market, then it has just given 7% returns. So here we can say we have given very good returns, and the difference is of around 88%. So even if we compare with the developed markets across the world in last 5 years, India has given best performance. Okay, so this is what we can see from these comparisons which we did. Now, if we look at how different indices inside the Indian stock market, how they have done. So if you look at this table, this will help you. So Nifty 50, if we see the P is of 21.7, whereas the average P for last 10 years is 24.4. So at present it is below average. And if we are just looking it from the P perspective, we can say it is below average. Similarly, for auto stocks, the P is of 22.29, while the average of 10 years is 55.4. Now, this Bank Nifty has a significant change, we can say. The current P is of only 13.6, whereas the average is of 26.14. So, this is significant below its average. And similarly, if you see other indices, these are most of them are below average, some are above average, like for finance, FMCG, IT, infra, these are above average. Then service sector is below, consumption is below, MNC, Nifty MNC is below, then PSUs is below. So for next perspective, if we want to look, where should we invest in present context based on these figures? So one sector that you can think of is of bank. So something in banks, Bank Nifty can also be a good option. And now here, for example, there is one tricky thing that I want to show you, that PSU Bank has a P of 10.4 and the average is of 27.9. So you would say, oh, it is fairly like it is like significantly below the average. But then if we compare it with the 5 years figures, then that is a striking point if you are investing in the bank sector also. Okay, so Bank Nifty, how it has fared against Nifty 50, if we see, Bank Nifty has given 60% returns. So overall the difference is of around 33%, 33 to 36%. If we compare PSU banks with Nifty 50, now here there is a striking difference. PSU Bank has given 157% return. Okay, so it is PSU Bank has given around 60% more return compared to the Nifty 50. And if you compare PSU with the Bank Nifty returns, then PSU Bank's difference goes to around 100%, almost 100% extra return compared to the Bank Nifty. So this point is that basically we can say Bank Nifty is at good valuations. If you are thinking even from mutual funds point of view, maybe you can try some thematic funds based on banks. So this is what I wanted to draw your attention to, and hope you like this video. Also, these are just recommendations. Please do your own due diligence before investing, and do like, share and subscribe to my channel. Thank you.